Here's the economic backdrop to the latest conniption over Greece and its debts. It is that business conditions are weakening around the world. Now, obviously, it's nothing like what happened in 2008, but in the 5 most important economies in the world, US, Europe, China, India and Brazil, the recovery is losing momentum. In Brazil and Europe, the line is below 50, which indicates actual contraction rather than just slow growth. So while all eyes are on the negotiations over the Greek bailout, in the corner of those eyes are the charts showing global growth heading south. Nevertheless, there was a solid bounce on commodity markets today, with oil up more than 5% in New York and all the metals up large as well. But gold has lost ground on the spot market today after rising 3.6% in New York. Here's a clearer depiction of what's happened in the gold market. And in fact, the spike and correction over the past few weeks is still within the lines that have defined it since the Federal Reserve started printing money in late 2008. European share markets had a huge session last night, but that was before stories started dribbling out of the talks on the Greek bailout that things weren't going too well, because the Greeks had produced their other books that showed things are worse even than everyone thought already. Anyway, that meant trading in New York was a bit more subdued, and by the time it got to Asia, it was more subdued again. Australian share prices rose 0.8%, building on yesterday's big rise. Woodside jumped 3.5% after starting production at a new oil well off Karratha. The banks all went up, but Fortescue lost 8%. And finally, the Aussie dollar had a wee rest today after getting lots of exercise lately. It's trading more or less steady tonight, and that's finance.